Okay, everyone, welcome to Trading with Market and Volume Profile course. So now we're going to start in the last part of this course, section 15, trade strategies using TPO charts and volume profile. So this is going to be the biggest section of the course. I'm going to split it into several different videos, each one focusing on a specific technique or strategy that you can use, going over all the concepts we've already talked about and different techniques, again, to use in your own trading strategies. So let's start off this video talking about what is known as the 80-20 rule, or the Dalton 80% rule, in honor of Dalton, the author of some of the most recognized market profile books. And so this is a rule that is very well known amongst all the market profile traders, and it's pretty simple. And it has the following principles. If price is outside of a previous value area and trades back into this value area for 2 consecutive minute periods, so that means for 2 TPO prints or 1 hour time, there is an 80% chance that it will rotate to the other value area extreme. This also works if a market opens inside of value from a previous session or day, it goes out, and then it accepts back in. Okay, and this is actually one of the best types of trades there are that I really like, because this type of failed breakdowns or failed breakouts is what gets traders trapped on the wrong side, and that just really adds fuel for a squeeze in the opposite direction. This is basic auction and acceptance. If price breaks out of value but can sustain that break, then it is what we would call a failed auction, which again, same thing as a failed breakout or a swing failure pattern, etc. There's a lot of different ways to call it. So basically what this means is we're going to have a value area that from a previous day or session. So in this case, I have the node area here with the curve, and then this rectangle will be our 68% value area. Again, we're focusing on market profile, so this is going to be 68% based on time, but you can also use this principle when talking about volume profile. So you can use it on either one, or use it as a combination, which is what we're mostly, what I'm teaching in this course and what I normally do most. So let's say the next session, there was a gap up and we opened up here. Then if price comes and trades for 2 consecutive periods inside of this value area, there is an 80% chance it will accept back in and go into the other side. Now, when we talk about trading into this value area, it doesn't mean the candlestick, the 30-minute candlestick, they both have to close inside. Even if it's just a wick, that's already considered trading inside. Obviously, if we have a solid candle close inside, then that's even going to be a stronger signal. Okay? And then the other part, if we go inside and then out and back in, same thing. If we open inside of this value on the next session, market then, let's say, has a open drive to the upside, and then we hit, I don't know, like the value area or a naked point of control that was over here for some big area of support resistance, and then we reverse and trade back in for 2 consecutive periods, then that means that we are now probably accepting back within this value, and then there's an 80% chance we seek a move back. You know, with this, obviously there's a lot of context to this. We want to be in rhythm with the day open type, the overall trend of the market at that moment. Also paying attention if there's any fundamental driven events, etc. This is a very discretionary rule, but we'll see a few examples now. This is a ES 30-minute chart, and we can see we have here this trading day with a value area delineated by these two black lines. So this was the 68%. This is based on volume profile, this value area. And then you can see right here, we have two 30-minute candles right here that traded back within this value area. And then you can see this was actually a very significant level because we had a big high volume node edge there as well. We pull back, test, and then we moved up, and eventually we hit the other side of this value area. And if we look at this in market profile, here we have this trading day. This profile is based off of just complete 24-hour or 23-hour day sessions. This is not a split session profile. And you can see right here, we have the value area. Let me put the extensions right there. We have the value area from the previous day. And then right here, we have 1, 2 consecutive TPO periods trading back inside of this. And then we also have this big ledge here. So we know this is a very important support resistance area as well. And then we just continue on and we trade to the other side. If we go into a crypto example, this is the Bitcoin chart. And you can see this day we had a value area high, value area low here. And then the next day, within the first 2 candles, we're immediately trading back inside, and we had a very quick move into the downside. One important thing to note is when you're doing this, you don't need to wait for the second candle to close in order to take it as a signal to get in. You can go into, this is a 30-minute chart. You can even go into a lower time frame to look for, more micro patterns. But if we have this first candle, like we have in this example, that closed inside of this value area, obviously we know that the next candle is going to open and trade inside of this value area as well. So just on the open of this second TPO period, we're already inside of this value and the rule is already applying. So you can even, in a case like this, where the first TPO closes inside, you can even look to operate right at the beginning of the second TPO because you're already trading inside of that value on the second period. Okay? And here's the same thing, looking at it through the market profile chart. This is again the Bitcoin daily session profile. We have our 68% value area right here. And you can see first period we open, and this is pretty much an open drive on this session. You can see the quick momentum, and then we close right here. And then as soon as the second one opens, we're already, inside of the rule. So then you can look in this case to trade going short. Your stop would be right above the open of this new session. And then you will be targeting, in this case, there's an 80% chance that we would go trade into the bottom of this value area over here. Here's another example in the NASDAQ market, and this is a volume profile example. And you can see how we're opening within the previous day's value area. We trade above it and we have a breakout. And then right here, we have this big bearish candle back inside. So as soon as this second TPO opens, we've already printed 2 consecutive periods inside of this value area. So then this is the signal that there's a 80% or so chance that this is going to be pushing down and seeking the low value, the value area low from the previous day session. Okay. And then if we go into Sierra chart, I'm going to show you an example here on the live charts. This was at the end of January that we saw this example. We're going to be talking about this. So we have our regular trading hours profile here. This is our extended trading hours. And you can see how we opened right here within value from the previous session. Market broke below. We did have a move back inside, but as we're going to see soon on the 30-minute chart, all this 4 candlesticks that closed or traded above this value area low, these were all one single TPO. So then we broke down again. So this was one single print. So this does not satisfy the rule. But then over here, we had this break back inside the previous day's value. And remember, RTH profiles always have more significance. Also, taking into context the time of day, this was 3 a.m. right here. So this was the London Open, which usually brings in a lot more volumes and volatility and the start of trending moves. And then we can see right here, this was the transition from the 4 a.m. TPO into the 4:30. So right here, we had 2 periods inside of this. And then you can see that started a nice trending move. We did have a little bit of resistance here near the highs from the start of the session and around the point of control, but eventually market did continue pushing through. And right here, we hit the value area high from the previous session. So if we go into the market profile and look at this here, this was the day profile, which you can see was pretty balanced. We have our value area. Remember, this value area is measured in terms of time because we're in the market profile. And the one on the 5-minute chart that I showed you is based on volume. But the values of them, you can verify that they're almost identical. There's maybe like 1 or 2 points difference between where the value area high and low is. And so you can see right here, we have the value area low. And then this is the period that I told you we had just one TPO close back above and then we broke down. So this does not satisfy the rule yet. But then we come back here and we have one which closes inside. So as soon as this second TPO opens inside of this value area, then this satisfied the rule. So in this case, if I was going to be trading this, well, obviously, you know, our stop loss would most definitely go, if you want to be very conservative, right below the low from London, and you can see we're right below this big ledge. So we have this low volume node area of protection, or you can put it below this impulse candle that broke back inside of value, and then we will be targeting the top value area right over here. Okay, so that in a nutshell is the Dalton 80% market profile rule, where if price finds two consecutive periods accepting within a previous value area, we expect it to go on to the next side. Okay, so that's it for this lesson, and I'll see you in the next chapter.